Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 23rd of June 2021 and we're carrying out our regular morning update on the news, financial and gold and silver prices. Firstly though, just a quick shout out to 3 videos we wish to draw your attention to. The first published yesterday entitled Hedge Fund that bet against GameStop shuts down, lesson for investors, where we talk about some cautionary issues that all of us now need to bear in mind before we invest our hard-earned monies. The second published on Sunday entitled Why Dollar Strength and Lower Gold and Silver Prices May Be a Short-Term Phenomenon, which may actually prove pertinent today, having seen the news headlines, which we shall cover in a moment. And the third published last Thursday, Why Gold and Silver Prices Just Crashed, which puts into context what is happening within the financial services industry and the global economy currently. And we've placed links to all 3 of these in the description box below. So let's now take a look at what is happening today. So, taking a look at what is happening in the news, looking at Bloomberg first thing this morning, we can see UK poised to ease travel curbs as airlines step up demands. UK, EU close to truce in Brexit trade dispute, officials say. Parasite drug analysed as possible COVID treatment in the UK trial. Perhaps a little more pertinent to us, Euro area economic activity jumps to 15-year high as virus fades, which is obviously good news. But the piece of news we want to draw your attention to, and something we've covered in very, very recent videos, Bank of England may beat the Fed to tapering. Now, for those who've listened to our videos over the last week, will be aware that our response to Fed Chair Jerome Powell's comments and the FOMC statement last Wednesday, a week ago today, it's incredible how quickly time flies, which was regarded, or all of them were regarded as hawkish, and we pointed out, well, actually, it's not that hawkish. And we did see, nevertheless, the dollar rise with the dollar index above 92. However, we pointed out that this could be shortly undone if other countries introduce tapers sooner. And this headline is just prophesying that. Bank of England may beat the Fed to tapering. The UK Central Bank is well placed to seize any first mover advantage in reducing economic stimulus. I'm not going to read all of it, just a very small part. With global inflation set to accelerate, investors accustomed to stimulus buoyed asset prices are assessing which major central bank will be the first to turn off the taps. Although attention is focused on the Federal Reserve, the Bank of England could well initiate stepping off the monetary accelerator. The UK economy is already poised to grow by more than 7% this year, beating both the US and European Union, and possibly leading the pack in 2022 as well. And while the 4-week delay to reopening the economy until July 19 will trim output this quarter and next, the shortfall will get made up by the end of the year. Bloomberg economist Dan Hansen sees the later reopening curtailing gross domestic product growth by 0.4% to 2.1 in the third quarter, but boosting the final quarter by the same amount to 1.4. Consumer confidence among Brits has rebounded swiftly since the pandemic struck. Consumer price inflation unexpectedly surpassed the central bank's target rate in May, and as you can see, it was at 2.1%. And this is part of the reason, unlike the Fed, who can warrant 5% and perhaps, more realistically 3.5%, we get jittery at 2.1. And it says the UK Central Bank expects inflation to peak at 2.5 with a return to target by year end that will hold for the foreseeable future. Really crucial, because that will have an effect on the dollar. And if we've already mentioned that Europe is probably going to perhaps be the last to taper. So we'll have a strengthening sterling against which the dollar we expect to weaken potentially on the back of this news. But of course, all this is just verbiage. It's only when they actually do it that it really counts. And then the euro falling slightly behind. Looking at the BBC, see what's in the news here. Anything different? Millions become millionaires during COVID pandemic. 10 seconds at that because it's just fascinating. More than 5 million people became millionaires across the world in 2020 despite economic damage from the COVID-19 pandemic. While many poor people became poorer, the number of millionaires increased by 5.2 million to 56.1 million globally, Credit Suisse research found. Recovering stock markets and soaring house prices helped boost their wealth. So there we go. They've never had it so good. Okay, well, on that basis, we've mentioned the US dollar. What is it doing? Well, we can see that the dollar index now is 91.7. It's down 0.05 today, but as we know from yesterday morning's video, it was over 92.1. So it has fallen back. Looking at crude oil prices, of course, they will have risen on the back of a slightly weaker dollar. All other things being equal, because of course it's more than just the dollar price that affects oil prices. And we can see that WTI crude is just over $73.50 and Brent crude just over $75.50. Looking at equity markets yesterday, they did well. They did extremely well, obviously, the day before. Yesterday, still positive territory, albeit all under 1%. Dow Jones up 68, S&P 500 up 21, and the Nasdaq Composite up 111. Markets today that are open, because obviously Wall Street's closed at the moment. We have the Euro Stoxx Index down just 12 points, less than 1/3%. FTSE's up 14, up 0.2%. The DAX, the German DAX, down 56, so it's down 0.36%. And the CAC, the French CAC Index, minus 21, and that's minus 0.3. Looking at Asia Pacific overnight, Hang Seng has staged a good recovery, up 1.7%, but the Nikkei and the Topix Index are down. Now, what we're all waiting for, of course, are gold and silver prices. Okay, well, over a 24-hour period, gold is up $5. We can see the chart on the screen. We have to say it looks very sort of jerky, for the want of a better expression, but we are talking only about a sort of $12 or $13 difference between highs and lows. Where does that leave us compared with the close last week? Well, as you can see, the markets closed at 1765. They're now at 1784, so $19 higher. Although it was slightly higher than that yesterday. Going to silver. Silver is up on a 24-hour period of 12 cents. Silver really does move much more extremely than gold, as you can see. On a week basis, though, we're looking at silver now having closed at 25.81, now at 25.99. So it's testing that 26 level. So it's up 18 cents on the week so far. And of course, Bitcoin staging a bit of a recovery. It's now up to 32,924. It did actually hit 28,852 yesterday. A lot of people were thinking it could have fallen to 25,000. But it's started to recover quite healthily today. Look at this. You can't get over the Bitcoin chart, can you? If you take a week's chart in view, just very quickly, you can see it's been on a downward slide. However, and this is why those who follow charts really should look at not just an hourly chart or a daily chart or a weekly chart or a monthly chart. If you look at the annual chart, it paints a slightly different picture. Although it's coming down now, who's to say that this fall isn't going to result in a retest of that $60,000 in the not too distant future? So, economic reports. Well, basically, looking at this, today is a key day. We have the current account deficit for Q1 being announced, but we also have the flash manufacturing and services PMIs for June, and new home sales. It's not going to be earth-shattering, whatever these reveal, but in terms of importance so far this week, it's probably the most important day. But Thursday and Friday are even more important. Tomorrow, because of the jobless claims, there's an awful lot of attention to that figure. But then on Friday, personal income, consumer spending, PCE, price index, etc. And we're having all of these Fed governors speaking out to give us an overview of what is actually being said. In terms of Jerome Powell yesterday, the overall sort of view is he is just holding the ship steady and trying not to upset the markets too much. Whether he achieves that is another matter, and we may very well do a video specifically on what Jerome Powell has said, but we'll make a judgment on that because we're not that confident it's going to particularly move the markets in either direction. Thank you so much for listening. Please do give us a thumbs up if you think this is useful. By all means, share the video, but certainly if you haven't subscribed, please do so. Press the bell sign so you're notified of our videos as and when they're published. Have a great day. Please comment if you wish. And until our next video, as they say in France, au revoir. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.